Hello and welcome, everybody. My name is Andrei Knight, and this is Institutional Trading Strategies. How are you today? Happy Wednesday. Hope you're all doing good. Thank you very much, Sandy. John Savage, I may need to disagree with you. It's been a buy up to this point, but some of them may be showing reversal signals. Of course, it all depends on your time frame. But we will take a look. Let me run you through what's on your chart first and how I use it. And then we'll apply it to a couple different pairs, as many as we have time for. I'm picking on the euro pound to start because this is one I've been trading today. I like to take my examples from real life trading. Not just theory. And this particular one has been a buy for me thus far. Might be triggering a further buy in just a moment. Of course, here the pound is in the second position. So a buy here means, of course, we are betting on the pound to weaken because it's telling us we need more pounds to buy each euro. Weaken, of course, means that any chart where the pound is in the first position might be starting to reverse to the downside now or in the near future. But I'll show you ways to confirm and or trigger that. Okay, I'm going to talk about the trade I just got out of, as well as the trade I might be triggering in a moment. And in the process, I'll share some of my favorite tools and indicators with you and how I use them. Those of you that have been to my prior institutional trading strategies workshops, bear with me. We're going to go through a little bit of a review. Reviews never hurt. So you'll get something out of it as well. And if you're new, we'll cover the basics of what you need to know. Now, why institutional trading strategies? Let me talk a little bit about the title of this workshop. It's not just that my indicators are better than anybody else. Heck, they're not more green, they're not more red. Nor is an indicator that's colored purple going to do better or worse for you. My view is that it's the trader, not the indicators, not the system, not the robot that makes or loses the money. Okay, the tools are a means to an end. What we really focus on in here is how to improve the trader. And we've talked about it in prior workshops. What separates a professional from an amateur? A consistent winner from somebody whose results are all over the place. That's institutional trading strategy. I used to be an institutional trader. But beyond that, I want to give you the mindset of one. And before we get even into the tools or indicators, like I said, that's not what it's about. I mean, I'm happy to share with you how I make my trade decisions. But what really separates a professional from an amateur, you guys, are a couple things. The main one being scenarios. An amateur trader uses a combination of fancy indicators, waits for them to turn a particular direction or color, and when they do, they take an entry. So does a trading robot. And if any of you have ever tried the $99 special, you know that if you let it run long enough, all it does is drain your account slowly over time. That's nice, Sharon. As I was saying. So the first mark of an amateur is you take every entry signal presented to you, just like a robot. But as human beings, we have judgment. We can decide which entry signals to take and which not. Imagine being at a casino. Playing blackjack. I don't know if any of you guys know this, but if you play every hand and bet the same amount every hand, you will lose money slowly over time. Because the game is designed mathematically in such a way that you will lose 3 hands for every 2 you win. The only way to make money at blackjack is to skip hands once in a while and to vary the size of your bet. Bigger when you're more likely to win, smaller when you're more likely to lose. Watch a professional blackjack player sometime. They never play every hand. They never bet the same amount every hand. Same as a trader taking every single entry that comes along, just like a trading robot would. Okay, yes, there's an element of random chance involved, but no, trading is not like gambling. Because if you do it right, you are the casino, not the player. Because you understand probability. You won't win every trade. I can't promise you that. But you will win more trades than you lose if you follow scenarios. And if you follow money management rules, the second thing that separates professionals from amateurs, your winners will tend to be bigger than your losers. More winners than losers, bigger winners than losers. That's the key to coming out ahead over time in any game of chance, including trading. Professionals understand this, amateurs don't. Amateurs are busy following a system, those that even have a system to begin with. But it takes more than that. So how do you determine which entries are worth taking, which are better pastime? That's where scenarios come in. Because if you have a scenario, you have a way of discerning which entries fit with what you're expecting and which don't. And therefore, which ones to take and which ones to skip. Mr. Savage, Visual Trader is a little script that we wrote. Some brokers now offer a variation of this, but we had ours about 6 years before they did. What it basically does is when you place a trade, it puts a line on your chart for your target and another line on your chart for your stop. So if you ever need to trail your stop, we never widen our stop. Professional traders don't. Stops only move in one direction, and that's in the direction of your trade to protect your profits. Or if you need to adjust your target, all you do is click on the line and drag it. You don't have to mess with math or filling in numbers on an order window. Hence the name, Visual Trader. You just drag lines around, and it adjusts your stop or your target. Or in the case of a pending order, what would trigger your entry. Oh, yeah, it does. Definitely. And Sharon, I don't mean to be rude, but it's my class, my agenda. I'm looking at the euro pound. I'm going to keep looking at the euro pound, and I already committed to looking at a couple of the pound crosses if there's time remaining at the end. Okay, so depending how fast we go, maybe there might be time for EU or AU, maybe not. I can't promise. I'll do my best. Okay, so what are you seeing on your charts? Actually, let's start with scenarios first before we even get into trading. The scenario, the long-term scenario is this. We've quite obviously put in a bottom here. We're looking at the daily chart now. How do I know that? Look at the candle shapes. Look at my indicators. Before I even explain what they are or how I use them, you can see they're flipping from bearish to bullish while this has been going flat. Boom. Yesterday, I get a very curious open, something that hasn't happened so far during this sideways range. I opened outside and above. And if that doesn't convince you, yesterday closed as a big bullish candle. Today opened outside and above. Conclusion, I'm expecting a bullish day today, probably looking to complete the move from down here to up here, which is my 21 exponential moving average. Okay, one of my favorite tools. 21 EMA applied to the close, more or less the center of my world. I'm either under it, moving down, or I'm over it, moving up, or in a case of a reversal like this, I'm on my way back to it. Okay, so it helps me orientate where I am already. Gee, that took all of 30 seconds, and I already have a trading plan. I am a bull on this pair today. I am going from here to here. Look how much more I already know, right? So what happens if I get a short entry? I simply ignore it. It doesn't fit with the scenario. That's how simple and easy it is, you guys. I've just cut the number of potential trades I'm willing to take in half. Yes, Drew. Generally, on the time frame we are trading. The problem with a 15-minute, a retest on the 15-minute is good for several 15-minute candles. What if it's 2 or 3 15-minute candles? That's not a full hour. If you take an entry on an hourly chart, barring your stop or target getting hit, you're planning to be at least in an hour, if not a couple hourly candles. You see what I mean? So 15-minute retest is good if you're entering and exiting based on the 15-minute chart, and the hourly is your higher time frame. It is not good enough for entry and exit on the hourly chart because, if anything, what it's going to force you to do is try to trade mid-candle. And you know how I feel about trading mid-candle. For those of you who are with me for the first time, the third thing that separates professionals from amateurs is professionals will only make decisions on candle open. It doesn't matter how fancy a system you're using or how long you spent racking your brain and analyzing. If you make your decision, your entry or your exit mid-candle, you are not using a trading system at all. Why? Because 5 days later, when you review your trade, the candles will look different. And then your justification for entering or exiting will simply not be there anymore. The only candles, the only indicators that won't change are the ones that have already closed. The only decision worth making is on a new open relative to what has just closed. Because the candle may move up or down, but its open will not change. It becomes part of the body. So remember, scenarios, money management, candle open only, regardless of whatever system you use. So if you stick to that, Drew, you understand why I wouldn't approve of a 15-minute retest. Not that they're not valid, but they're valid for 15 to 45 minutes, and you need something that's valid for 1 to 4 hours. If you're trading on the hourly chart with the 4 hour as your higher time frame. Now, if you're going to keep trading on the 15-minute with the hourly as your higher time frame, that's different. That comes back to what I said earlier. I believe the pound is going down, the euro pound is going up, but I did follow that up by saying depending on your time frame. It could well be that we have a 5 to 15-minute retracement up, or on this chart down, during the move I'm expecting. The time frame could be different. Okay, so we've got our scenario. I am a bull on this pair. I am trading from here to here. Oh, thank you, John. Yeah, I don't get all tense and antsy when I'm trading. Notice that the pauses come at the end of a complete sentence. But thank you for noticing, John. I don't like to be tense when I'm trading. That certainly doesn't help. Conversely, if trading makes you tense or excited, chances are you're probably doing something wrong. Right? So it works both ways. And definitely, Boyke, it helps to keep the throat moist. I tend to do several of these back to back. Okay, I'm continuing to zoom in. I know I'm a bull for today. Okay. The next question comes up, well, what time of the day am I looking for a trade? Morning, afternoon, evening? The 4-hour chart tells me the current direction. Water, ionized alkaline water with a little bit of monochromatic gold in it. Sorry, monotonic gold. If you must know. Well, if I look at where today began, where a scenario becomes activated, we had a reversal candle, a bullish open. We're above the 21. It's aiming up. We're outside the tunnel of fives. I would say the direction is bullish. If the direction was bearish, even though I'm expecting a bullish day, I have no justification yet to be looking for bullish entries. Okay, the timing isn't right. But right now I'm expecting a bullish day, and the current direction is bullish. Okay, sounds to me like we have a go to look for bullish entries. And again, if it was bearish, doesn't mean I give up on my daily trade idea. It just means I wait for better timing. Okay, so bullish day, bullish current direction. Now I can go to my hourly chart and begin to look for bullish entries. Well, once again, Walker, because on my daily chart, I decided I'm a bull. If I get a short signal, I will ignore it. You must have not been here for the beginning. I said the main thing that separates a professional from an amateur is we will not take every entry signal our system generates. Because if we did, we'd lose just like all the robots. You have to know how to discern which entries are worth taking and which entries are worth skipping. Well, I have to be in a bearish day for this particular pair or for whatever pair I'm trading. But when we did our daily analysis together at the beginning of the class, don't slow us down because you were late. I got a lot to cover in a short amount of time to do it. We did our daily analysis and decided we're bulls. Long story short. Here, we were flat for 2 weeks straight. Starting yesterday, we started a retracement back to our daily 21. We had a bullish open today relative to yesterday's close. We have not yet reached our target. The blue outlines my anticipated trading zone. Therefore, I'm taking long entries only. And I'm ignoring all short signals. The advantage is I just cut my number of possibilities in half, which to a professional is a good thing. Okay, Walker? An amateur wants to be trading. A professional wants to be winning. How do you win? You reduce your options to hopefully the more likely ones to succeed. Boyke, I agree it was until about the 12th of January. Then it was sideways. Now we're on a bullish retracement. Once we get to the 21, which is at 80.46, we will see if it holds as resistance or not, bounces us down, or if it breaks and then retests from the other side as support. Then I'll decide if I'm a bull up to maybe the 200 moving average, or if I'm a bear down to a double bottom. But I'm not in the fortune-telling business. I'm going to wait till we get here, and then I will see if it's support or resistance, if it's a break or a bounce. Okay? But right now, I'm working on trading up to here. So that's the first thing, Walker. Bullish open, target not yet reached. Bullish indicators supporting it. I know I'm a bull for today. Next part was the 4-hour chart, Walker. I know I'm a bull right now because I might be expecting a bullish move sometime today, but if the current direction is down, why look for entries? I wait for the current trend to align with my daily prediction. And then I look for entries in that direction. My goodness, everywhere except where I am. Walker, I haven't gotten there yet. Neither has price. But if you allow me, I shall explain it to you. Deal? The fourth thing that separates professionals from amateurs, patience. You're talking about where the wick was previously, Leonard? There's a very good reason for that. And yes, breaking it certainly sends a signal. That signal being part of my reason for re-entry after my first target was hit today. If I get that far before I run out of time, I'll let you know what it is and how I made that decision. But yeah, good observation. And John, thank you for covering the tunnel of fives for Alan. It's 5-period smooth moving averages. If your trading platform doesn't have smooth, you can substitute an exponential. Just use a shift of 1. But it is not the open and the close. It's the high and the low. Most of my moving averages are applied to the close. Okay? But in the case of the tunnel of 5, 1 is the lows, 1 is the highs. And that's what creates the tunneling effect. And this, very simply, think of it as a noise filter. Okay, for example, here, it sends a strong message that all my bodies are opening outside of it. Now I know I'm not just in an uptrend, but I'm in a really strong, sustained uptrend. And I'm willing to overlook that I lost a little steam on my momentum indicator. Okay, so it's kind of a way of measuring the strength and the commitment of a trade. Notice most of my candles that have small bodies and don't go anywhere originate from inside the tunnel. My trends really get underway when I'm outside the tunnel. Okay, same here. There's a reason I'm feeling really optimistic about this current candle, besides it making a higher high and besides it having the support of both my indicators. The fact that it opened outside the tunnel of fives and on the cross of the preceding doji. Okay, so the tunnel is kind of a noise filter. I told you over or under the 21. I kind of hinted the 21 aiming up or down. The tunnel of fives is kind of a filter. Sometimes it rides above the 21, sometimes below, sometimes right on it. Sometimes it's really fat, sometimes it's really thin. Like the Bollinger Bands, by the way, it tends to get really thin right before something springs. Okay, so watch out particularly for those times. The trend is definitely my friend, Boyke. You did hear me say I wait for the 4-hour chart to turn in the direction of my trade before I look for entries in that direction. The trend is definitely my friend until the bend in the end. Okay, you got to learn to spot the ends of trends every bit as much as learning to spot the beginnings of them. Here too, tunnel of fives. Notice the candles. Notice it doesn't matter on the time frame. Okay, teeny bodies. Notice what happens to the length of the candles as we start opening outside the tunnel of fives. I'm not versus daily, Boyke. The downtrend ended on June 12th. For a week and a half, the trend has been sideways, not down. Don't stay locked in one idea. Things change. We were in a downtrend till June 12th. For the past week and a half, we've been going sideways. For the past 2 days, I'm not ready to call it an uptrend, okay? An up retracement. We still have yet to find out if we're going to find a resistance and form a double bottom. Okay? But double bottom is part of a reversal to the upside. The thing is, reversals don't happen instantly. On a daily chart, they can take weeks. On an hourly chart, they can take days. Okay? It's not up or down. As a matter of fact, markets spend 80% of their time chopping sideways and only 20% of their time trending. Did you know that? Yeah, we are on a correction thus far. When we get to the 21, we will see if it holds as resistance or bounces us back down. Other moving averages, by the way, besides the tunnel of fives and the 21, I like to use a 50 simple moving average and a 200 simple moving average. Okay, remember the 21 is exponential. Why go to simple? My reasoning is, A, I like contrast. Why have things that show me the same or similar? And B, if I'm averaging something like 200 periods, What the hell do I care about the most recent price action? Right? I want the emphasis on the most recent price action. On my shorter moving averages, not the longer ones. See what I mean? Drew, K period is 5, D period is 3, percent slowing is 3. Okay, you got it? K5, D3, slowing 3. Why would I short something that's moving up, Walker? Again, your trading mind seems to be everywhere other than where it should be. That's not an insult. That's an observation of a coach who's trying to help you improve. I'll short it if I find resistance at my anticipated resistance point. Why would I short something that's moving up? So I can be in the negative? That, by the way, also goes when I get an entry signal. If my system triggers a long entry, but right on candle open price starts dropping, why would I be in a rush to push them out? So I can sit in the negative. I make the decision on candle open to go long. But to actually click the button, I'll wait till price stops moving down and resumes moving up. Right? Because every tick down, it's more and more on sale. It's also closer to my stop, reducing my potential risk, and further from my target, increasing my potential gain. Well, I said only long today, didn't I? Based on my daily analysis. The tunnel of fives is a 2 5-period smooth moving averages, Leonard. One is applied to the highs, one is applied to the lows. If you don't have smoothed, you can use an exponential moving average, but then there's usually a shift box. Put a 1 in there. Okay? Boyke, your question, if time frames disagree, I'm either in a range, if it's wide enough and smooth enough to trade. By smooth, I mean the bodies get smaller before we reverse and go in the other direction. Wide enough that risk reward makes sense. Or if I'm just bouncing up and down, chopping, every candle engulfs the one before, I simply stay aside. Okay, well, Walker, you're not teaching the class. I am. And I'm trying to explain why I think it's a reasonable buy. And I've already made money on this pair buy. We are talking about my second trade. And I didn't say right now. I'm trying to get to explaining what the trigger would be. Jeez, you guys. Win much or always jump the gun? When you have your class, you're welcome to explain your system. I'm in the process of explaining mine. Okay. So we're expecting a bullish day. We're expecting a bullish move. Now we are looking for a bullish entry. What got my attention on this guy, you guys, first part of today, very simply, look at the bodies getting smaller. Look at where the bodies are getting smaller, above a 21 that's aiming up. The 21 itself is above the 50, is above the 200. Some refer to this as an alligator, right? Two jaws and a tongue in between. And when the jaw is opening, the trend tends to continue. But you want to get out before the jaw snaps shut. This is one of the best configurations you can get for a trend continuation. Okay, so this is looking good. One of my other favorite tools is Fibonacci. Let me draw a fib on the most recent up move. Aha! Remember this support we found? We shrink down, we form a doji with its cross above a support level. You might be wondering why I didn't wait for the tunnel of fives here. I didn't have to. I had an alternate signal. I'm finding support right on a fib level. I have my third open in a row right above the fib level. Now let's confirm with our indicators. Okay, I haven't covered the indicators yet. Most indicators fall into one of two groups, you guys. This is what nobody tells you about indicators. Your indicator is either a momentum, sometimes known as a trend following indicator, or it's an oscillator. Okay? The key to indicators is to have one of each and to know when to switch. There's no such thing as one indicator that works better than all others. They will all fail at some point, and they are all interchangeable. Surprise! Nobody ever told you that. They will all fail at some point, which is why I have two. One from each group. Which one you choose from which group really doesn't matter. I like the Ozma. Notice I use the same settings as the MACD, 12, 26, 9. You could substitute a MACD in here. It'll work just as well. I like stochastics. You get two lines instead of one for my oscillator. You could substitute an RSI in here. Just change 20 and 80 to 30 and 70. It'll work just as well. You could substitute a CCI in here. It'll work just as well. The reason, the logic goes, and in between I have an ADX. Notice I grayed out the positive DI and negative DI lines, and I'm just looking at the average line. The average line measures strength, and I have a cutoff at 30. So here's how this goes. Yeah, exactly, to confirm. So first I need permission to look for an entry, Leonard. I do my analysis top down. Once I have permission to look for an entry and get something that's promising, a candle open, then I look down and confirm with whichever indicator ADX is favoring. ADX is strength, not momentum. It's momentum if I use the positive and negative DI lines. But then it would be redundant to the OSMO. Yeah, ADX is itself a momentum type indicator. You're absolutely right. If I make the positive DI, green, the negative DI red, look what happens. When the green is over the red, I'm posting green bars. When the red is over the green, I'm posting red bars. When they get wider apart, the bars get bigger. When they get closer together, the bars get smaller. ADX, being a momentum indicator, is going to show me the same exact thing as OSMA, just displayed in a different way. But I find this easier to read than this. So yeah, using all the lines, you are correct. It's a momentum-based indicator. Blacking those out and focusing just on the average line, it actually shows me strength. And here's how my reasoning goes. A strength greater than 30 is enough to break support resistance levels, therefore leading to higher highs or lower lows. Higher highs, lower lows means we're in a trend. In a trend, I'm most interested in, are we gaining momentum or losing it? If strength is less than 30, support resistance levels are likely to bounce. When you're bouncing back and forth between two levels, you are in a range. And when you're in a range, I'm much more interested in oscillating up or down. Am I in a bullish or bearish way? Momentum is meaningless if I'm going to get knocked down by a level as soon as I hit it. That's kind of the reasoning. So the idea is you're looking for a certain kind of trade that day based on your daily analysis. You wait for the current trend to turn in that direction based on the 4-hour chart. You go to the hourly chart and look for an entry in that direction, and when you get something promising, you confirm it with whichever indicator ADX is favoring. Make sense? So either of these, this open or this open, is a promising entry. And again, normally I'd wait till I come out of the tunnel of 5. The only reason I didn't in this case is because I had something additional, which in this case was the fib, and finding support right on the fib. Not randomly in empty space, but right on it. And not just once, but 1, 2, 3 times in a row. Okay, that sent a pretty promising signal. And if that doesn't sell you, well, this candle is bigger than this one, and this candle opened bullish relative to it. That's why I say either of these. A more aggressive entry, a more conservative entry. Okay, where do I put my stop? I like to put my stop 2 support or resistance levels away. In this case, I have the fib and the 21, plus padding. Never right on the line. I set my stops wide, my targets shy. What is padding? Padding, very simply, is the length of the most recent wick that moved against you, plus your spread, plus 1. Okay? So I would take these 2 support levels, add the length of this wick, my stop would go somewhere here on this entry. My stop would go somewhere here because I have the length of the wick already over here on this entry. Okay, 2 support resistance levels away, plus the length of the most recent wick that moved against me, against the trade, I should say, plus the spread, plus 1. Yeah, so in this case, I'm not risking very much to find out if I'm wrong. It's a matter of risk-reward. You know, I'm okay with a 100 pip stop, Leonard, if I'm chasing a 400 pip target. It's all relative. If I'm chasing a 40 pip target, I'm not going to tolerate more than a 12 or 15 pip stop. It all depends, right? It's all relative depending on the target. So let's talk about targets. I showed you the long-term target, which is the daily 21. But that's long-term. We have to break that down into bite-sized chunks. My first chunk, very simply, a double top. Right? We bounced off of the 118 before. Remember the resistance you talked about, Leonard? There it is, to the pip. Price is reacting to this particular pip. Well, my most recent support was at 23. Those of you guys that have been to my Fibonacci class will know this. And if you haven't, FYI, mark your calendar, July 18th, I'll be doing another one. 4th of July is a holiday. Okay, so July 18th will be my next Fibonacci class. We'll go into this tool in detail. But based on a 23 retracement, my target is either 118 or 127. Well, having already found resistance at 118, I think I'm going to favor the 118. Okay, so the first target, remember I mentioned I just got out of a trade right before class. And then I mentioned I'm stocking another trade, possibly for later today, maybe tomorrow. Okay, first trade was from here up to the 118. And you can see, even if we go no further, that's already a very healthy risk-reward ratio. I like 3 to 1 or better. That looks like a 4 to 1, maybe even a 5 to 1. 50 goes to 161, correct. Which brings me to my second trade that I'm still waiting on. Okay, I said the most recent support was at 23. But my C, the furthest point reached, was actually at 50. And you're absolutely correct, Drew. It goes to 161. Therein lies my second trade, which, by the way, remember my trading zone? Up to the daily 21? My long-term target is anyway in this zone, right? So now the hourly chart just matched what my daily chart told me. But in order to get into the second trade and target 80-40, remember, target's always a little shy, particularly when there's a daily 21 in the way. Stop's always wide. In order to trigger the second trade, guess what I have to do? I have to break and close, not just poke, break and close above the 118 and come back down, test it as support. Okay, so in other words, I'm looking for another bullish entry, Walker, but it has not yet triggered. I'm still waiting for it. I have to close above 118 and retest it from the other side as support. That's what will trigger the second half up to the daily 21, which is a hair before the 161. Okay. Now, as far as being a bear, I remain open to that possibility, yes, but only if I close beneath this level once again, establishing it as a resistance, and get a reversal candlestick pattern, and see my indicator, in this case, Osma, because that's the one favored by ADX, go dark and turn down. But right now, I have no business looking for a short with everything aiming up. Okay? Look at that. We got it. We opened above the 118, holding it as support, even as I speak. Okay? Indicators are still green. Chances just got much better of us hitting 80-40. Maybe even 80-48 with enough momentum. Because we found support with a candle open on what was previously resistance twice. See, you don't have to know the future, you guys. You just have to be able to read a chart and know what you're looking for. Therein lies the key. It's not just in finding the answers, it's in knowing which questions to ask. How to set up conditional tests. Okay, real quick, FX admin, just bear with me. I'm almost done. Is anybody on after me? Can I take like 5 minutes? Okay. Let me take 5 minutes, if I may, just to look at the other pairs that folks asked about. I'll just run through it real quick. Now they know how to use the tools, so the explanations won't be as lengthy. Okay, the matter, I mentioned matter of time frame, John Savage. In general, my other pound crosses, like the pound dollar, the pound yen, notice the patterns. Hammer or shooting star or doji, whatever you want to call it, they all mean the same thing. Bearish open relative to that. Indicators switching from bullish to bearish. Candle bodies getting bigger in that direction. Today opened bearish relative to yesterday's close. Overall, I'm expecting a down day on the pound yen. Have not yet reached my daily 21. Okay, so overall, here again, I said matter of time frame. Overall, I am a bear for the day. I am a bear multi-day. But look at the 4-hour chart. Ozma's gone dark. Look at my candle bodies. Hourly chart, doji bullish open. Haven't yet reached the 21. So short-term bullish, John, but overall, long-term bearish. That's why I said it depends on your time frame. In other words, we are about to experience an up retracement in an otherwise longer-term downside move. Make sense? Pound dollar, same thing. We're in the middle of a multi-day down retracement. We have not yet reached the logical target of that down retracement, so I expect more down days ahead. But here again, the current direction in the short to medium term is bullish. So it's an up retracement in a down move. And if you look at the 4-hour chart, you understand why. Before we go down further, we had to retest the 21 we just broke as support as resistance. So an up retracement in a down move. And looking at the current candle, also looking at the time of day, John, I'd say we're falling into a chop at this point. Remember, there's a third direction, sideways. Okay, in this case, not worth a trade because risk reward's not going to make sense within this chop. If we manage to break out of the chop zone and say retest the top as support or retest the bottom as resistance, I'm all for it. I actually think the pound dollar has a chance of moving down some, but we're not outside the tunnel of FUD. So probably not very far. Okay, so not stand aside forever, but let's get out of this chop zone and retest it from the other side. Okay, anything I say can change. You know, just like Walker, I said I'm a bull for now, but I gave you the criteria that would make me a bear. Okay, and John, I wouldn't trade this guy right now, but boy, if this holds as resistance and I get an open outside the tunnel of 5, yeah, sure. Anything is subject to change based on the most current information. Anything I tell you is based on right now. Sharon, you wanted EU and AU. FYI, EU has been one of those pairs I've been staying out of for a long time. This is why. Look at my dailies. Nothing really conclusive. So the short answer, stay out. Neither bull or bear. Okay? If you must know, it's going to be choppy and tricky. Look at my ADX. Look at the disagreement of indicators. Probably, I would say, opened bullish relative to the doji, but opened under the 21 as resistance. I would say lurch up, followed by a correction back down. That's part of the reason why I would say don't trade. 4 hour is bearish right now with bullish indicators. So I would say stay out now, but maybe be a cautious bull if you find support at this 200 and this tunnel of fives. And same thing here. Looks bullish. We're above the 21. It's aiming up. We're outside the tunnel of fives, but my indicators are aiming down. So either I need an open inside the tunnel of fives to trade down to the 21, or I need this current down move to close outside the tunnel of fives, the next candle to open bullish and outside the tunnel of fives, and my indicators to turn back up. And that's what would make me go from a no trade situation to a tradable situation. AU. Well, we found support at the 21 this morning, right? Which makes me a cautious bull. However, my indicators are aiming down, and I appear to be in a chop zone. So bullish with a very high chance of interrupting the trade or the move and turning back down. We broke above the 21. We found support. Indicators are bullish. Okay, based on the 4 hour, I would say I'm a cautious bull, but hey, since we found resistance here 2 prior candles, how about I draw a horizontal line and make this a condition of entry? I have to break above 93.93 and find support there, which is minimum going to be 2 hourly candles, not just one, right? Notice here, I closed above it, but I failed to test it as support. Now I'm beneath it, testing as resistance. So I'm in a holding pattern right now, Sharon. But if I break above this level, test it as support, and my daily and 4 hour are still bullish when I get there, then I might take an entry, assuming my indicator turns around and supports the move. Exactly. I want to break above that resistance. Well, this resistance tested as support. 94.25. That's 30 pips. I'll take it if I can put in a stop 10 to 12 pips away, not more. But yeah, overall, I mean, risk reward is not terribly great on this. If I put in a fib, that's a 38 retracement. What did you say? 94.25? I'm going to bet you're going to find resistance at 94.10 before you even get there. Why? Because I have a fib with very good snaps and a 38 retracement. So that gives me a high likelihood of reversal at 138, which would be 94.10. It's slim pickings. A different day might give you better results. I'm not anti-EU or AU. I'm just not very enthusiastic about it today. I think the EG has a much better chance of moving further, which is why that's the example I picked. You know, because I actually traded it today. I just closed the winning trade before class. I showed you exactly how I set it up. And I'm still waiting actually just got 10 minutes ago another bullish entry. On a different day, I might stay clear of the EG, and I might be all over the EU. But EU, quite honestly, Sharon, has been a bane in my side for over 2 weeks now. With my daily class, my group that meets every morning, we look at it diligently every morning, and my students ask me, so what about the EU? And I tell them, sorry, not today. And I'm getting tired of telling them that. Yeah, same with the AU, because it feels like I've been doing so every morning. That's a 161 on my chart. That's for 50 or 61 retracements, Leonard. On a 38 retracement, 138 is what I favor. You might see 141 on some charts, but not on mine. What I do is based on observation. Very simple. Same reason I use a 30 on my ADX. Some schools teach 20 or 25. Same reason why I use a 21 EMA and not a 22 or 20 SMA. I've tried it all the other ways. The 21 EMA works the best, snaps the most. The 38 tends to work more reliably than the 141. All righty, you guys. FX admin, thank you for letting me run over. I do appreciate it. I like being able to answer people's questions. And also show that, hey, it's not one cherry-picked pair, right? The same tools just worked on several time frames on several different pairs. Couple links for you guys. First one is a daily newspaper that I put out, totally free. I got a little robot that scans all the financial headlines and sorts them in the order that they get clicked on the most. In other words, what are other traders watching and thinking about? And you can visit that link every morning. Like I said, it's totally free. Or you can subscribe to have the latest edition delivered to your Twitter or to your email. Here's my own Twitter and Facebook if you'd like to follow me and stay in touch. Now, I did cover most of my favorite indicators, but obviously in the time allotted, I have to brush over them. I could get into detail on every specific pattern I look for, and I do. I've got some recorded workshops that you can watch at your convenience, like 5.5 hours worth. So I really go into detail. Plus, I cover some of those other things I touched on: probability, risk reward, money management, trading psychology, which we didn't even have a chance to touch on. Okay? Everything I feel you need to know to be a consistently profitable trader. 5.5 hours, you could do it in a weekend, and by Monday be trading better. Okay? Or at least with more confidence. The trading better will take some practice, in all fairness. If you found today useful, you guys, I got great news. I do this twice a day. Every morning when the markets are opening, I set up my trades and scenarios for the day, just like I did on the EG with you, including triggers and targets. At the end of the day, we meet again, and we discuss which scenarios worked, which didn't, and why, and what clues there were, and what we can do better for tomorrow. If you found this hour together useful, imagine spending 10 hours a week, 40 hours a month together. It costs less than you typically lose in a trade, 2 at the most, for 40 hours of training every month. Consider it. We do offer a 7-day money-back guarantee. If I don't make you happy and improve your trading, I'm not going to keep your money. Simple as that. All right? And if you're on a budget, you're low on time, you're low on money, we have what we call the budget program, the weekly video updates. Here I just send you a recording. You don't get to interact. You don't get to ask questions, but you get a recording of our Monday morning session. Why Monday morning? I mentioned I like candle opens. Every day I check my daily chart. Well, every week I check my weekly charts and outline my scenarios for the week ahead. So at least you have a trading plan to follow. You know which currencies are likely to move, which aren't, and what kind of long-term move we're looking to complete. And I'll mail that to you every Monday morning. All righty, you guys, thank you very much for your time. I hope I've given you some useful ideas. I hope the second half of your week ends up being even more profitable than the first. And FX Admin, thank you so much for your patience and the extra time. Truly appreciate it. Have a great week, everybody.